Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs from a tactical perspective. Today's date is September 18, 2024. It is also the FOMC rate decision day where the Fed is going to decide whether it goes 25 basis points or 50 basis points. Adam has a great preview that you can read on our website at ForexLive.com. This is what it looks like. Go and read it. What we do know is that there is a lot of uncertainty with this Fed rate decision, and much is going to depend upon what the Fed chair has to say and how he says it. So it's going to be a prolonged, drawn-out process. Don't expect that the first statement or decision is going to be the defining statement or decision movement for the markets. So that's where technical levels become important, and that's what we'll go through in this video right here. So with so much uncertainty, it's important to understand what are the key levels on the top side, what are the key levels on the downside. I'm going to take a look at the euro versus US dollar here on the hourly chart, try to outline what would be more bullish, what would be more bearish. And if you take a look at the euro versus US dollar, I have this yellow area right here. It sticks out like a sore thumb. That's why I do it in yellow. And you can see that it was developed way back here where the price started to use this level either as support or resistance through here. It went above it, it went below it, it went back above it. We came back down to it right through here and used the level as resistance right here. And then moved away from it. We came back to the level right here and spiked higher, but then found resistance against the level and moved lower again. And the trading this week, we've seen the price move back up to this area right through here. Yes, we did move a little bit above in trading yesterday, but then rotated to the downside, and then in trading here today, we're seeing a rebound back to the upside. And where we do, we reestablish the high level as resistance. So getting above the 1.114 level would be more bullish and would open the door for further upside momentum for this current currency pair. We might go to this high right here. And if we get above that, we may go to the 112 level up here. That's a nice round number, and also was a double top up here for 2 consecutive days here before the market started its rotation to the downside. So it's a pretty clear the steps to the upside for the euro versus US dollar. One, get above 111.40, get above 111.72, and then 112.00, and opens the door for further upside. Now on the downside, what do we have? Well, we have this other yellow area here. It sticks out like a sore thumb once again, and you can see why I outlined that in yellow, because there's lots of support here. It formed the floor before moving to the upside. We came back down to the floor right here, found support, moved higher. We fell below the floor, and then we started to see sellers against that level, moved away from the level, and then returned to the level through here. This is the pre-employment and then the unemployment day right through here. So we kind of discount that as, well, that's just market volatility from the result, but we moved away from it here. And in trading last week and this week, we moved back up to this area right through here, tried to find resistance against, and then broke back above it. In trading yesterday, we fell down toward it, didn't quite get to it, and rotated to the upside. So once again, this level is going to be obviously a key area right through here between 110.97 and 111.04. Also, the rising 100-hour moving average is right in between that level, making it increasingly more important for traders. So get below that level is more bearish, and then we'll look toward the 200-hour moving average. We moved above the 200-hour moving average in trading last week and stayed above that level. Go back in time, we kind of sort of found resistance against it. This is the unemployment day right here. But you go back in time, you can see other levels, times with the price. Use that 200-hour moving average as levels to either move sharply to the upside or try to find early buyers against it, so on and so forth. So the 200-hour moving average is going to be somewhat important as well. That comes in at 110.73, get below that level, and we start to look toward the 38.2% retracement of this move up from the August low to the August high right through here. That level comes in at 110.39 now. Admittedly, the price did move below that level going back in time, not this week, but last week. And the sellers had their shot through here, but they couldn't get to lower to the 50% retracement. And we started to find support buyers right here, forming the floor to push the price to the upside. So that's the roadmap for the euro versus US dollar. Let's take a look at the dollar versus yen next. And what we've seen over the last 2 days is pretty standard technical stuff. In trading yesterday, we had a sharp move to the upside that saw the price move above the 100 and then come up to the 200, found some willing sellers against that level and then broke above it. I mean, where did we go? We went right to the 38.2% retracement of this target to the downside right here. That level comes at 142.48. So guess what? That level is now important going forward. It was an important level in trading earlier today. It's going to be an important level through the FOMC rate decision. So if the Fed is more hawkish, and we get above that level, it opens the door for the 50% retracement up here. Maybe this swing area up through here up to 143.67, and get above that level. We start to move even higher with the 61.8% retracement as the next key target. So this is the progression to the upside. Get above 38, get to above the 50, get above the swing area, get above the move up to the 61.8% retracement. Now on the downside, what do we do in trading here today? Well, we move right down to the 100-hour moving average. Remember yesterday in my videos, I talked about getting above that moving average and staying above. Noting that in trading last week, the price moved above that 100-hour moving average and failed here. It failed above here. Prior to that, we did find resistance against it, and there are other times over time you can go back in time and see where the price uses that moving average, including today. So this is key, and it gives traders some added confidence that if we break below the 100-hour moving average right here, that would open the door for further downside momentum. 140.71 would be a target on the downside. This low right here at 144.24 would be a target on the downside. And we also know the 139.57 low, which was sort of random right here, would be an important level on the downside. Now, this 140.24 level is also an important level off the daily chart. If I go to the daily chart and look at 140.248, you go back in time. So this low right here, this is the end of December low, came in at 140.248. So be aware of that level. And going back to the hourly chart, the market was aware of that level. It was aware of the level right here and bounced off it not once but twice. When we fell below it here, we did use that level as a resistance level right here. Tried to stay below that level, couldn't do it, and then use that level as support, and pushed higher eventually. So the 140.24 level is going to be a key level. Don't discount that level. We move below it and stay below that level. That's going to be more bearish going forward. So that's the roadmap for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And we take a look at this. Again, the technicals did a pretty good job so far over the last 2 days in using this swing area. Again, clear as day. Why it's so important. Yes, we moved a little bit above it here, but then quickly faded to the downside. That was the unemployment day. In trading this week, we came up to that level, found willing sellers, including today, where we found sellers against that level. So get above that level. It opens the door for further upside momentum with the high price from the month of August as the next key target at 132.659. If we go to the daily chart and take a look at where that took us, 132.659 was right here. It was ahead of this high going all the way back to March of 2022. Yes, March of 2022. So get above that level. We'll look toward the 133 level, really 132.977. That was this high right here. And we get above that, the 133 level, it opens the door for further upside momentum. Going back to our hourly chart on the downside, what do we have? Well, in trading both yesterday and today, the price came down and tested moving averages. In this case, it was the 100 bar moving average on the 4-hour chart. The 100-hour moving average is moving higher and below that level. And in trading here today, we came down to test the 100-hour moving average, found early buyers and started to move to the upside. So guess what? These are 2 moving averages. Actually, these 3 moving averages, 1, 2, 3 moving averages would be levels that would have to get to and through on the downside to increase the bearish bias going forward. If it can, then that would open up the door for further selling in the sterling versus US dollar to the downside for this pair. That would come after a more hawkish Fed, a more dovish Fed would have the price moving down up toward the 132.659 level, and would get above that level, look to 133. So that's the roadmaps for both the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Know your roadmap, know where you're going, know the key levels, because it's going to be a volatile ride out there in trading here today. So be aware, be prepared. You can also sit this one out too and come back on another day when the picture is more clear. So you can do that too. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.